All right, ladies and gentlemen, welcome. This is the market update for mid-May and Bitcoin briefing. Let's get started. The S&P 500 came up a little bit since we last talked, 1.32% year to date. NASDAQ, Dow Jones, gold, and Bitcoin all down, and I'm going to tell you why. So let's jump into the charts here. The S&P 500 is still holding strong. I added the red circle up there in the top right and the bottom right to show you the indicators, trying to zoom in more. Again, this is a monthly chart. We like to look at a long-term perspective, and it's still blue. You know, the candles are still blue and above the moving averages, and the candles down here at the bottom, you can show are fading from teal to dark blue, which is I wouldn't say bearish, but just showing the trend is running out of gas a little bit. So, yeah, the market just looks pretty indecisive right now, and then we're going to get into why. One is that valuations are just at an all-time high. The PE ratios and things like that are near their upper band historically, and for that matter, the dollar is making a huge bounce back, and so that's putting pressure on gold, Bitcoin, and in the market too. So not only that, we have interest rates going up. The Fed chair is new, and they're talking about raising rates multiple times over a multi-year period, and so the market is trying to digest that. But the Fed did come out recently and say they are not going to raise rates for this month, basically. So that was good for the short term. But yeah, market just is a little indecisive here, and so it's bouncing around, but no red candles. So in that, this chart as well is a little bit different take on the indicator. These candles are still green, which historically means we should be open to higher prices. But you can obviously see there's a volatility picking up in there as well. So. And then our last one, I kind of threw this on here because I wanted to make sure people understood what I was talking about. You see how this gap emerges right here, and I have it in the red circle. That is a bullish trend. And see that channel opens up, and it stays open for multiple years as the market made higher highs. Then you can see as that gap closed, the market then began to make lower lows, and it kind of fell off a cliff in the financial crisis. Then as the moving averages emerge and that channel opens back up, we've been riding that trend ever since. So just threw a circle in there to show you that gap is still pretty open and looking bullish, and we should be open to higher prices. But again, the short-term volatility, kind of like we saw here, can pose. I mean, even if you look from here to here, that's basically a 2-year move that the market didn't really go anywhere. So we need to be open to those consolidation patterns in order for us to go higher. And I think that's what we're seeing right now in the market with the indecision. Now, the dollar. I've been talking about it a lot, and it relates to gold. Down here, my blue circle moved, but basically that should be up here over that. But I'm going to keep going. So you see the moving averages crossed and a bearish trend emerged. Our moving averages crossed, which is showing a new bearish trend emerging. But you saw last time, even I was saying the dollar is trying to fight back to that moving average. And in here, we saw that it actually broke through it. And so you see there's not much difference, 91.63 to 93.09. It's only about $1.50, but still that move is big. And it's having an impact in the short term on the market, on interest rates and bonds and gold and a Bitcoin. So the dollar is rallying against basically everything right now. And don't think that trend should continue too much longer, but I don't think it's over either. So we'll have to watch that and see where it goes and just keep giving you the information. So with that, gold is down. We showed in the chart, basically gold was holding $1,300 an ounce. This is GLD, which trades at about not exactly parity of 1/10 of an ounce, but pretty close. And so you see here that it looks like the blue candles are starting to roll over a little bit. The moving averages are really tight. Whereas in here, in a bullish uptrend, you know, you had a nice separation. You kind of have that gap. They cross. There's a gap on the downside. We're kind of just indecisive here as gold is kind of rolling over. So gold went below 1,300 here and wasn't able to hold that line with the dollar rally. So gold looks bearish in the short term. And then we have Bitcoin. Bitcoin, this is a daily chart. So the other ones have been monthly. This one's daily. So shorter term chart because the futures were just released in December. But you can kind of see here a series of lower lows. And so Bitcoin looks a little bearish in the short term as well. Big conference out in New York, consensus, 8,000 people getting together to talk about Bitcoin and blockchain. And so don't think the trend of, cryptocurrencies and the blockchain is over, but definitely still in a bearish chart pattern. And then with that, just picked up one news article that I thought was important. Talked about FedEx in the past as it looks to use AI, artificial intelligence, and robots for delivery. It also expects to use the blockchain, top executives say. So obviously one of the largest shipping and logistics companies in the world is looking to leverage the blockchain for its future. So that's all I got for you today, guys. If you have questions, please reach out to us. If you find this of value, please smash the like buttons. And we will have an update for you after Memorial Day. Hope you have a great rest of May. And all you future graduates, congratulations. Stay safe and welcome to summer. The sun is out. Thanks, everybody. Take care. Bye. The material in this video has no regard to the specific investment objectives, financial situations, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or an offer to buy or sell a security or any other related financial instruments. Nor should any of the content be taken as investment advice. Any of the opinions expressed in this video are subject to change without notice, and Uncommon Wealth Partners LLC is not under any obligation to update or keep current the information contained herein. Uncommon Wealth Partners LLC and its respected officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. Uncommon Wealth Partners does not accept any liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.